Good morning, students. How are you? Yes, guys. So I'm C. Ashish Well, and today we shall be doing a very interesting chapter on audit of banks. So, students, have you logged in? Yes, please drop your mails. Those of you who have logged in, just drop in your mails, guys. Yes. Good morning, Koshki. And what about others? Yes, students, drop your mail so that I am able to know that you have joined in. So, students, you have learned about this chapter. You have studied this chapter at your intermediate level also, and you have got a basic understanding regarding audit of banks. And besides that, anyways, you are also quite familiar with the functioning of banks, with the basic functions of the bank, what they are supposed to do, what is their business model. So guys, can you tell me, can you drop a mail informing me what is the core function of a bank? What is the core function of a commercial bank? Yes, Kaushiki, Viraj, what is the core function of a commercial bank? Can you drop some mails? What is the core function of a commercial bank? Yes, anybody? Yes, Koshki, Viraj. Any responses? What is the core function of a bank? Yes. Yes, Janavi, she is also saying accepting deposits and providing loans. Yes. Very good. So, guys, a commercial bank accepts deposits from the public and lends it to trade, to industry, to citizens, to farmers, to corporates. And the rate at which a bank accepts deposits is lower, and the rate at which it lends money is higher. So this is their basic business model, and the spread which is there between the lending rate and deposit rate, it is used to earn profits. So clear. So this basic understanding you already have at your intermediate level. So just trying to refreshen you up, guys. So another thing, students, I would like to tell you that you have to keep in mind that by attending these 2-3 classes on bank audit, you are not going to become an expert. It is a very vast topic, having requiring extensive knowledge and also practical experience. So we shall be limiting ourselves in context of your exams. So we shall be tuning our strategy in these lectures basically towards your exam, how to answer questions in your exams relating to this topic, and what mistakes you guys commit while you are answering the questions, or you are not able to answer those questions pertaining to bank audit. So it is not as ticklish, as tough a topic as it is made out to be. So first of all, you require some basic understanding of some basic terms which should be clear to you, and then we shall be taking this process further. So fine enough, guys. So guys, tell me another thing. What are the special considerations in a bank audit, in audit of banks? Because there must have been some special considerations. That is why it has been incorporated as a special chapter, as a separate chapter in your syllabus. Isn't it, guys? So what are the special considerations in audit of banks? You have also got a fair inkling of it at your intermediate level. So just recapitulate it. What are the special consideration in audit of banks? What things, what important things get to play in audit of banks? As an auditor, what are the special considerations? Yes. Yes, Namrata, Kaushiki, Viraj. What are the special considerations? What are the special consideration in audit of banks? So one special consideration is widespread geographical presence. Another could be extensive dependence on technology. IT. Heavily regulated. Okay. And large number of transactions. It means scale of banking operations is greater. So all these points and similar points, students, these you can very well understand. These are sort of self-explanatory. So you also know that banks today work on CBS platform, core banking solution. You have heard the term core banking solution. So what is core banking solution? So basically what happens in core banking solution, that banks access data in real time from a centralized server. So all the branches, these are connected to the centralized server, and all the data is being extracted from the central server, and the customers can use the services from bank from anywhere. Okay, say you are based in Delhi, and you can operate your account from Mumbai. So these things practically you are doing. You are using apps, you are using various payment gateway systems. So these things you know already. So, but from examination point of view, you have to keep in mind these 5 points, that these are the special considerations which arise in audit of banks. Why we are studying bank audit as a separate topic? It is because of these special considerations which play out and which have to be taken care of by an auditor while auditing banks. So heavily regulated. So you know that Reserve Bank of India, RBI, is regulator in case of banks. So banks are subject to various laws, and it is also subject to supervision of Reserve Bank of India from time to time. And banks have to function in accordance with the procedures, rules laid down by RBI from time to time. There are inspections conducted by RBI from time to time. So therefore we say that banks are heavily regulated, and a large number of laws are applicable to banks. Like, and students, you have to keep in your mind one important thing, that Banking Regulation Act 1949, Banking Regulation Act 1949 is the governing legislation of banks. So again, this is very important point from your exam point of view, that Banking Regulation Act 1949 is the governing legislation for the banks. It is the basic law, primary law which governs the functioning of banks. Okay. So besides that, there are other laws applicable to banking sector, like Companies Act 2013, like Prevention of Money Laundering Act 2002, like SARFAESI Act. So SARFAESI, you might have heard about SARFAESI. Have you heard what is its purpose? Yes, students. Anybody? Yes, Namrata, Janvi, Viraj. Any one of you who can tell what is the purpose of SARFAESI? So students, while you are studying, I would request you to keep your mind, ears, and eyes open, and also try to correlate the things, generally what is happening around you, so that you do not acquire merely bookish knowledge which is there in your study material, but you are able to correlate that also. Yes, Kaushiki, you are saying not heard. That's very strange. And what about Namrata and Viraj? What about you? So its full form is securitization and reconstruction of financial assets. And enforcement of Security Interest Act. (2002). So, as an acronym, in short form, it is known as SARFAESI in common language, in popular language, in the language of banking. Okay. So the basic purpose of this act is that it gives right to bankers it gives powers to bankers to dispose of, to sell off the assets, the securities which the borrowers have mortgaged in case they do not pay up the amount they have borrowed. Okay. So, like say in case some account turns NPA, then after following the due process, which is in accordance with this law, the banks can sell the properties which are mortgaged for availing that loan or for availing that credit facility. So, guys, haven't you seen any advertisement in newspapers regarding selling of properties by banks under SARFAESI Act? So this is what I meant by when I say that you have to keep your eyes, ears open to understand what is happening around you. So such kind of advertisements, guys, if you see even last 10 days newspapers, at least on 3-4 days, you would find such kind of advertisements in papers. So it is because we pay least attention to these things that we do not know about them. Yes, Vikash, now you are saying that you have seen. Viraj is saying, yes, I have done bank audit 3 times, but not heard about SARFAESI. Now understood. So, Viraj, had you seen some borrower file which was an NPA account? Some of the special consideration in audit of banks. So, students, now we shall quickly go through before starting audit procedures relating to various individual items in the balance sheet of bank. We shall quickly go through how the financial statements of banks are prepared. What is the process? And how auditors are appointed? And besides that, guys, I would also be simultaneously simultaneously make you understand the topic of concurrent audit also. So, guys, any one of you is good morning, Anandi. Any one of you who can tell me what is which law governs preparation of financial statements? Which is the primary law which governs preparation and presentation of financial statements of a bank? Under which law the format has been prescribed for preparation and presentation of financial statements of a bank? Yes. Do you remember, guys? This you have already studied. This you have already studied. Yes. Yes, anybody? Can you tell, students? Okay. Yes, Namrata, that's correct. Banking Regulation Act. The format for preparation and presentation of financial statements of a bank is there in Banking Regulation Act 1949. So what is this format known as? In which schedule it is prescribed? Yes. So format for preparation of balance sheet of a bank is prescribed in third schedule. To what third schedule? To Banking Regulation Act 1949. So Namrata, you are wrong. You are saying that in intermediate level you have not read about this thing. It is there in the syllabus, and it has got two parts. One is Form A, which prescribes balance sheet format, and one is Part B, Form B, which prescribes profit and loss format. So you can go through these formats by searching online, and it is not in your module, but just to enhance your knowledge, just to have a look, guys. Go online and search about third schedule to Banking Regulation Act. Why such things are needed? While studying, why such things are needed? Because such things make us more familiar. Such things make us more familiar with these kind of topics. Suppose once you have undertaken this type of activity, once you have done such type of things, then you are not going to forget any time in whole of your life. You would not forget that that format for balance sheet is prescribed in third schedule to Banking Regulation Act 1949, and for balance sheet it is Form A, and for profit and loss it is Form B. You would not have to cram up the things then. Okay. So sometimes while studying, we leave these basic important fundamental things. So clear to you guys? And mark also important distinction while remembering. So what is the important distinction? Say format for preparation of financial statement of companies is Schedule 3 to Companies Act, as you know already. So here it is also number 3, but it is stated as third schedule. So while writing in your exams, do quote correct thing that it is third schedule, not right schedule 3, because you are doing everywhere you are doing Schedule 3 of Companies Act. So spontaneously the fingers write Schedule 3. So while answering, make it right. Make it a point to write third schedule to Banking Regulation Act, not Schedule 3. Remember this way. So Anandi, please just try to imbibe what I am trying to say. Listen patiently, and I have not prepared any separate notes for this. So if you enjoy watching and then you read from module, you can share your you can yourself jot down your important points. So there is no point in dishing you ready-made notes, because that is not a proper learning process. You have to learn to apply your mind. That is very important. You first study and then understand the concepts and then apply those concepts. And this is how your exam is all about. Whether these are MCQs, whether these are case study based questions, or whether at the final level the descriptive paper of 70 marks. All the questions are application based. You have to apply the things. Okay. So clear, students? And students, one more important thing you have to remember is that banks have to follow accounting standards as prescribed under Section 133 of Companies Act 2013, read with Rule 7. Read with Rule 7 of Companies Accounts Rules. Now, what are these standards? These standards are not Ind AS. Ind AS are not applicable to banks till now. That is very important point for you to remember, students. Its implementation has been deferred by RBI, and these are still, banks are still in the process of adapting to these standards, but these have not been implemented yet. So therefore, normal other accounting standards which are applicable to entities to which Ind AS are not applicable, the same accounting standards are applicable to banks also. Okay, because at final you are studying about Ind AS, so sometimes you wrongly get an impression that obviously Ind AS would be applicable to banks. Okay, for presently, Ind AS are not applicable to banks. So, students, how the financial statements of a bank are prepared? Okay, students, first we take about nationalized banks or public sector banks. So as you know that government is one of the major stakeholders in these banks, in nationalized banks, and these are spread all over the country. These are having branches in urban centers, in metros, in rural areas, in far-flung areas of the country. So the preparation of financial statements of nationalized banks involves preparation of financial statements of at branch level. So first of all, financial statements are prepared at the branch level. Okay. And then these are consolidated at the circle level, at the zonal levels, and finally at HO level. And at HO level, all the activities of different verticals of bank, these are also combined of all different departments. So here, what we are referring to consolidation, you have not to confuse it with the consolidated financial statements. Okay, so for the time being, we are talking about about the process of preparation of standalone financial statements of a bank. How these are prepared. So first of all, these are prepared at the branch level, and then these are, you can say, combined, consolidated. Different branches are falling within a circle. These are combined at the circle level, at the zonal level, and then this process goes on, and final aggregation is done at HO level. Okay. So this was about standalone financial statements. And what about consolidated financial statements? Say, like if the bank has subsidiaries, okay, or it has some joint ventures, then it would have to prepare also consolidated financial statements, which banks do. And when consolidated financial statements are prepared, then all the norms which are applicable for consolidated for preparation of consolidated financial statements, those apply. Okay. Clear, guys? Fairly simple things, but you have to remember these. And now we come to the pertinent question about audit of banks. Now, students, in case of nationalized banks, or in case of public sector banks, audit is conducted at head office level by statutory central auditors. Statutory central auditors, which we call as SCAs. So these are, say, 4 or 5 experienced firms of chartered accountants, experienced audit firms, which have no, Janvi, CFS is not prepared at branch level. It is only at HO level. Okay. So, and branch audit is conducted by statutory branch auditors. SBAs. And who appoints auditors of nationalized banks, of public sector banks? It is done by the board of directors. It is done by the bank acting through its board of directors with the prior approval of RBI. Now that is the main important thing. You have to remember that in case of nationalized banks, the auditors, be it statutory central auditors, be it statutory branch auditors, appointment is made by the bank acting through its board of directors with the approval of Reserve Bank of India. With the approval of Reserve Bank of India. Now, for examination point of view, for MCQ point of view, this becomes important key point to remember. Okay. And how does this operate practically? So students, there is a form which is to be filled by the audit firms. So the panel goes to RBI, and RBI, after vetting it, sends back to the to ICI. The panel is being prepared by ICI, but ICI has the role only for preparing the correct panel. It does not allot the audit. Okay, and this panel after vetting is sent by RBI to the commercial banks, to the nationalized banks, and who appoint their auditors from that panel. But before appointing some firm as auditor, obviously they again seek approval of RBI. Okay. Yes, Kaushiki, central auditor is for bank as a whole, for HO, for bank as a whole. The function of statutory branch auditor is limited, is restricted to that branch only. Whereas statutory central auditors, they are the audit firms who would be signing on the financial statements of the complete bank, of the bank as a whole. Okay. Clear to you, Kaushiki? And what about banks which are not nationalized banks? What about private sector banks? So in those cases, the auditors are appointed by shareholders in AGM, as in case of companies, but that too with prior approval of RBI. So RBI approval is mandatory. And in case of private sector banks, there is no system of getting branch audit for getting all the branches audited, because these banks have been formed late about 20-25 years ago, and they are making extensive use of technology. So the balance sheet of bank as a whole is prepared, and there is no concept of separate branch audit in case of private sector banks. Yes, Namrata. Statutory central auditors, they form their opinion on by considering the reports of statutory branch auditors. Definitely, they may take a view on some matter which has been raised by statutory branch auditors. Okay, so in this way, while auditing books of branch, auditing books of bank as a whole, so essay pertaining to using work of another auditor, that would be relevant. Okay. So as audit procedures of statutory central auditors are concerned, so that essay using work of another auditor, that is relevant, which you have studied at intermediate level, and also you must have gone through in your finals also. So clear, students, about the appointment of auditors? And also remember that banks which are listed, they have also to follow all the listing regulations. LODR, they have to follow all the listing requirements, listing regulations in accordance with the SEBI requirements. Yes, guys. Clear up till now? The general things are clear to you? So now we shall also talk about concurrent audit little bit. So this topic, concurrent audit, is also is at the end of your chapter. Those of you who are referring to your modules, it is basically at page 9.53. So what we were talking right now, this pertain to statutory audit. This pertain to statutory external audit. So we were talking about statutory central auditors, statutory branch auditors. So this audit relates to the expression of opinion on financial statements by an external auditor, which is mandated under law, which is required under law, which is required under Banking Regulation Act 1949. Okay. Yes, statutory central auditor again. Namrata, these are appointed by prior approval of RBI, like I have told you in case of branch auditors. So the purpose of statutory audit is to express opinion on financial statements. Okay, so these are the people who would be signing on the balance sheet, on the audit report of a bank. But what about concurrent audit? So you have heard this term quite often, and I think most of you have gone through practical training and must have conducted or been part of concurrent audit. Yes. Has anybody of you been part of concurrent audit? Yes, Viraj, Kaushiki, Anandi, Namrata. Any one of you? Has any one of you been part of concurrent audit? Have you done concurrent audit of some branch? So tell me what is objective of concurrent audit? Yes. What is objective of concurrent audit? What is its nature? What is its scope? What is it akin to? What is it similar with? Have you got any idea, guys? Yes, Namrata, she is saying yes, we have done in articleship. So what is your view about that, Namrata? What is its nature? Yes, Namrata, I am asking you. What is its nature? What is the nature of concurrent audit? Yes, you are right, Namrata. Regular checking. Yes, that is one part. But what I am precisely asking you, what is its nature? What concurrent audit is similar to? With which kind of audit it is similar? Yes, Jay, real-time audit. Yes, correct. It is a real-time audit. Yes, guys, the purpose of my interacting with you is to open you up. So Jay has written a very good thing, real-time audit. So concurrent audit relates to transactions as these happen in real time. So there is a little time lag between verification, between checking and the transactions when they happen. It is not after that the auditor would come after 5-6 months or after completion of year that he would conduct a post-mortem and do all sort of checking. So concurrent audit is similar to, guys, you have not been able to pick up a very simple basic point till now. Concurrent audit is similar to internal audit. Guys, why didn't this occur to you? Why didn't this occur to you? Concurrent audit is a sort of internal audit. It is similar to internal audit. It is a kind of system, it is a kind of mechanism, procedures developed by the banks to verify their workings, to verify whether their systems, whether the internal controls put in place by them are working properly or not. Okay. So yes, Namrata, in banks, we know, you can say that when we talk about internal audit, we use the term concurrent audit in case of banks. So concurrent audit basically means verifying the transactions as these happen. Okay. And one more important thing you have to keep in mind, that concurrent audit virtually covers all areas of banking. So this kind of basic understanding would help you in answering questions, in answering MCQs, in answering case study based questions. So what are the different areas of banking? Like deposits, like advances, like cash, like even other general areas, like other housekeeping areas. So like foreign exchange, you can say, if a branch is dealing in foreign exchange. So virtually all areas of working of a branch, these fall in the domain of concurrent audit. Clear? Yes, students. And you have also to remember that concurrent audit pertains to a branch. So a person who is appointed as concurrent audit, he works at that branch, or he provides the services to that branch. Okay. So clear? Clear, students? So there may be many branches of the bank, and the bank management may have decided to get concurrent audit of the same. Okay. And in accordance with the laid down parameters, in accordance with the laid down policy, So Namrata, housekeeping means general office areas like say regarding you can take an example like changing of duties. So even these areas. Okay. Housekeeping basically general internal management at the branch. Okay. So functioning of branch which is not restricted to specified areas pertaining to deposits, advances, general housekeeping like keeping record of attendance system. So all these kind of things. So students, clear to you, concurrent audit is taken up at the level of branch. Okay, the concurrent auditor gives his report relating to working of a branch, and this report is usually given monthly. Every month it is being given. No, Namrata, there is not much difference between internal audit and concurrent audit. In case of banks, you can very well say that concurrent audit is similar to internal audit. Okay. Yes, clear to you, Namrata. Then who can be appointed as concurrent auditor? Who can be appointed as concurrent auditor? Yes. So, as you know, concurrent audit is management function. Okay, it is management function. So, concurrent auditor is also appointed by bank management in accordance with policy laid down by central audit department in banks. So there is an audit department in banks, inspection and audit department. Okay, so a policy is made in accordance with RBI guidelines by the Central Inspection and Audit Department of a bank with prior approval of audit committee or board. Audit committee. So in case of banks, there is audit committee, ACB, audit committee or board. So it lays down the policy for appointment of concurrent auditors. So accordingly, concurrent auditors are appointed. Now, pertinent question is that whether concurrent auditor has to be a chartered accountant or he can be somebody else. So it is quite possible that concurrent auditors are firms of chartered accountants who are rendering their services to the bank as concurrent auditor, or there is also a possibility that banks may employ their own staff as concurrent auditors. It is not necessary that only chartered accountants can be appointed as concurrent auditors. Even banks' own staff can also be appointed as concurrent auditor. They are regular employees of the bank, they also may be appointed as concurrent auditor because it is an internal management function. Okay. Or it could be a mix between these two also. So again, it depends upon the policy of the bank. And not every branch, students, you have to remember that not every branch is would be under concurrent audit. In case of nationalized banks, public sector banks, it is not that every branch would be under the concurrent audit. In accordance with the policy made by the bank at the HO level and in accordance with RBI guidelines, the banks choose certain branches for concurrent auditor depending upon their risk parameters. Okay. Like say branches dealing in foreign exchange, or large or branches having large borrow accounts, or large branches where quantum of advances is high. Okay. So or some branches which might be chosen depending upon some other criteria. So it is for the bank management to decide. Okay. And one more important thing of concurrent audit is that when concurrent auditor gives his report, since his function is similar to that of an internal auditor, okay, so he has to discuss his findings with the branch manager before giving his report, with the branch incumbent. Now this sort of understanding, students, it would help you in answering the questions. Before he gives you, yes, Jay, you are right. All branches do not fall under concurrent audit. All branches do not fall under the concurrent audit. Now it differs from bank to bank, which branches they want to be to fall under the concurrent audit, and RBI has not fixed rigid guidelines relating to these. These might pertain to that general guidelines that some risky areas or large advances. Now this is normally left to the discretion of the bank management. But the point is that every bank ought to have a concurrent audit system in the bank as a whole. Okay, so there has to be a concurrent audit system. So this system was not there about 25, 30 years ago. I think the concurrent auditor has to discuss the findings with the branch manager. Now, what is the significance of it? What is the significance of it? Yes, students, can you tell? I have told you that that concurrent auditor before submitting his report for a month, he has to discuss his findings with the branch incumbent, with the branch in charge. Now, what is the significance of this aspect? What is the importance of this aspect? Why does he need to do so? Yes, anybody? Yes, Jay, Namrata, Kaushiki, Viraj. Yes, Kaushiki is writing, yes, so that management may be timely informed. Yes, it could be Kaushiki, but this is not the proper reason. What about others? Yes, Jay, so that corrective action can be taken. Yes, it can be there. And one important aspect you are forgetting. So, students, before he gives it in writing, the concurrent auditor gives his findings in writing for a month. He should discuss it with the branch in charge to get his point of view of what does he have to say, what does the branch management has to say about this particular finding. It is quite possible that a second view is also possible. That say the concurrent auditor maybe not right in his opinion, or by discussing that matter with the branch in charge, he might get to know something which was earlier not in his knowledge. Okay, so that becomes very, very important. So therefore, students, you have to remember that concurrent auditor, he has to discuss findings with the branch manager, with the branch incumbent, before giving his report. And in some banks, he has to also expressly state in his report that I have discussed all these findings with the branch manager, with the branch management, because it enables higher authorities to take a view, like look, that this is also in the knowledge of branch manager. And if something has been discussed with the branch in charge, and he does not rectify those deficiencies, then controlling authorities can pull him up. Okay, so clear students, is it clear to you guys? And another important thing, guys, which would happen you in answering your questions relating to this topic, is that concurrent auditor is not, that the function of concurrent auditor is not restricted to fault finding alone. He has also to get the things corrected, like in case of internal auditor. His job is not just to point out the deficiencies. His job is not to point out the mistakes and submit his report and go away. No, his function is, his job, his duties are to get those deficiencies corrected and follow up with the branch management whether these deficiencies have been corrected or not. So guys, now you can imagine that how broad the scope of concurrent audit is. Yes, guys, now you are now getting a fair idea of the functions of concurrent audit. And are you students also drop your mails? Are you able to understand the topic? Yes, guys. Yes, Namrata Koshki writing yes. Okay, so I hope that you are understanding, and with every minute, with every passage of time, your understanding should increase. So this is also important from your examination point of view, that you have to remember that one of the main duties of the concurrent auditor is not only to point out deficiencies, but uh, also to follow up with management to get those deficiencies removed, to get those deficiencies corrected. Okay, obviously, guys, he can't himself correct those deficiencies. These would have to be done by the bank staff. These would have to be done by the bank employees. But the point is that he would have to make genuine efforts. He would have to make sincere efforts for getting those deficiencies removed. He would have to constantly follow up. Yes, clear. So now we shall be coming to various items in financial statements of banks. So this chapter is all about internal controls and audit procedures. Which relate to verification of various items appearing in financial statements of a bank. Okay. So like on asset sides, what are the main items in the balance sheet of bank? Like cash in hand, like cash, balance with the RBI, balance with other banks, advances, investments. So these are some of the items appearing on the asset sides on the in the balance sheet of a bank. And on the liability sides, there is capital, there are borrowings, there are deposits, and other liabilities. So guys, on the asset side, advances are one of the major items in the balance sheet of the bank. So because as we had considered at the very outset in the beginning, the main function of bank is accepting deposits and lending money. So the act of uh, lending to the borrowers gives rise to the appearance of advances in the balance sheet of a bank, in the financial statements of a bank. So these advances constitute one of the most important items in the balance sheet of a bank. Okay, so that is why we lay more stress on the verification of advances, on the internal controls pertaining to advances, on the proper valuation of advances, on the various audit procedures which are applied by the auditor relating to verification of advances. on the asset classification norms, on the provisioning norms which are prescribed by Reserve Bank of India pertaining to advances. Okay, so and this is also why you find many questions in your exams pertaining to bank audit which relate to advances in some way or another way. Okay, it is not that questions wouldn't come from other areas, but there is a distinct possibility that questions would definitely be asked from this area, from advances. Okay, so guys, while preparing for CA exams, you are in your finals, you already know, please do not leave any topic while you are studying some chapter. Please be thorough about the whole chapter. Do not leave anything. Like, say, I give you an example. Say if you are reading this chapter on audit of banks. Now say the chapter of concurrent audit is written at the end. It falls at, say, page whatever is it in your module. So by the time you come to the concurrent audit, you feel exhausted, and you leave that topic. So that is not the proper way. So you had to get a understanding of all the topics, because the questions set in exams these days, these are of highly analytical in nature. These one aspect is related to another, and second aspect is related to something else. So you have to analyze the whole situation and give the answer. Okay. And while we are discussing all these items, friends, simultaneously, I shall also be touching upon the duties of concurrent auditor, upon the functions of concurrent auditor in relation to that aspect, so that both things go simultaneously, and you can differentiate in your mind about all these things, that how these things are related to concurrent auditor and how these things are related to statutory auditors. Okay. So clear? Is it clear to you guys? Now advances. So let me ask a basic question to you, students. Have you heard about these terms? Credit appraisal, sanctioning, disbursement, documentation, review, monitoring, and supervision. Yes, these are terms in relation to advances. Have you heard about these terms? Those of you who are referring to modules, we are at page number 9.24. Yes. Unless you understand some basic terms, how you can how unless the meaning, unless the import of some basic terms is clear to you, how you can do justice with the topic. It is not going to be possible. So what is credit appraisal? Do you have any idea? You have already read bank audit in your intermediate level. What is credit appraisal? Yes. Anybody? Jay, Kaushiki, Janvi, Namrata. What is credit appraisal? Yes. Any idea? Yes. Namrata is writing, checking the creditability or ability of a person to repay loan. Yes. Namrata, it is one part of that. What about others? So what is appraisal? Appraisal simply means to assess, to make a judgment about something. Yes, Jay is how much loan can be given? Yes, obviously, Jay, it is right. It is part of credit appraisal. So all of you are writing some points, tidbits, some points which all together form part of credit appraisal. Yes, Janvi is saying about credit rating of the borrower. Yes. So appraisal means to assess, to make a judgment. Say before a bank, a branch sanctions a loan, what is the logical process? The borrower would have to submit a loan application form along with necessary documents. Okay, like say company wants some cash credit facilities, so it would be submitting a loan application form along with a proposal show giving projections of justifying its needed credit facilities. Okay, so when a loan application is received, it is vetted. It is vetted by the branch management, by employees of the bank to see whether they can lend the money to the borrower, whether the company or borrower is credit worthy or not, whether he would be in a position to repay the loan, what is his nature of business, and what is his credit reputation, what is his market reputation, what is his credit worthiness, what is his CIBIL score. Okay, so all these things would be taken into consideration, and what the amount he is seeking, what the amount the company is seeking, whether that is justified or not. So these kind of activities help help the bank management to make a choice about the decision whether they want to lend to the customer or not. So this is the first part in in credit process. Credit, that is credit appraisal. Okay. Now, once credit appraisal has been done, then what is the second part? The loan is sanctioned. Now, students, you have also to remember that banks work according to the system of delegation of powers. Okay, it is not that that the branch in charge would be having unlimited powers. So he would be having, say, depending upon his scale, he would be having powers of, say, sanctioning loan up to, say, 2 crores or up to 5 crores, and beyond that, the proposal would go to their higher authorities, to the controlling authorities. And the proposal which is sent by branch to the controlling authorities, then it is again appraised. They go through the recommendations made by the branch and see whether it is justified or not, whether it would be prudent or not to lend the money to that borrower. And it is only after following this process that a sanction letter is given. So every loan, every credit facility is backed by a sanction letter. Okay, so this you have to remember. So every credit facility, every loan, this has to be backed by a proper sanction letter. So what does sanction letter contain? Sanction letter contains various terms and conditions. Okay, it contains various terms and conditions which have to be complied with by the borrower. Okay, and then comes documentation. Now you know that after sanction, the banks ask the borrower to get documentation completed. So what is the documentation? Documentation means signing the agreements between the borrower, between the company and the bank. Okay, so that these are legally binding. Like, say, when a company obtains cash credit facilities from a bank, it signs hypothecation agreement with the bank. Say it lends, it mortgages some property, then it has to complete formalities in this regard. Okay, so this is known as documentation. So after documentation is complete, so first step is credit appraisal, then comes sanctioning, and then comes documentation. After documentation is complete, disbursement is done, which is a consequence of the sanction. But disbursement is done only after documentation is complete. Okay, you have to understand these basic things. And once the money is released to borrower, then the account has to be continuously reviewed, monitored, and supervised whether it is operating satisfactorily, whether the borrower is complying with all the terms and conditions. Okay, so these kind of things. So you get the idea of the basic steps in advances. Okay. So what are the internal controls pertaining to advances? What should be the auditor's area of focus? What should be the auditor's area of focus regarding internal control over advances? So the auditor would be concerned about what? He would examine area of credit appraisal. So students, what you have understood, all these points relate to internal control. It is so easy to answer. So if you understand the fundamentals, you can yourself make your own points and write in the exam. Say question comes in the exam, what would you see in relation to internal control over advances? State any 4 points. Say this type of question. It is not going to be as simple as that. Say if I formulate this question, I make this question application based. I give you a situation, and you would have to analyze it that these points relate to internal control. Okay. Like credit appraisal. Now, what I would be seeing as an auditor relating to internal control over advances, that whether the branch is conducting credit appraisal properly or not. It would be my duty. Whether loan applications are being received properly, these are filled up, these are being evaluated, and on the basis of that recommendations are made. These all things are fall within the domain of credit appraisal. Whether the borrower is credit worthy, whether any market inquiries have been made, these all things fall within the domain of credit appraisal. And students, one more term you have to learn. In case of banks, there are 2 terms being used. One is sanction and one is renewal or review. So what is the term of, what is the meaning of sanction and renewal? Is there any difference between the two? So say if I am a company and I go to a bank for the first time and say the bank sanctions me ₹1 crore as cash credit facility. So I assume that you already know about cash credit facilities. So the branch would have sanctioned me a cash credit facility of ₹1 crore. And you also know that cash credit facilities are by their nature, these are short-term borrowings for the company. These are banks lend them usually for a period of 12 months. These are supposed to be rotated within a period of 12 months. But practically these facilities go on. So what happens is after 12 months, these facilities are again renewed. So in banking language, we call them as renewal. That the amount which was sanctioned, it is now renewed. Okay. So in renewal also the same process is followed. Again, you have to remember, in renewal also the same process is followed as is followed in case of a sanction. Loan application form is given, proposal is given. Although the branch has got some database, it has got understanding of the company, it has got information about the conduct of account of the company, but it would carry out a renewal because in working capital credit facilities, as I have told you that these are granted for a period of 12 months. So before their next due date on which they are to expire, a renewal process is carried out. Okay. At the time of renewal, say if the credit facilities were granted last year for rupees 1 crore, and now again there is no change, then separate documentation would not be taken because agreement is already there. However, if say after 12 months the company says now I am in need of more funds, so I want the credit facilities to be increased from rupees 1 crore to say 1.5 crore. Okay. So what would happen? Then fresh documents would have to be executed because at the earlier at the time of earlier sanction, the documents were executed for rupees 1 crore. So to be legally binding, these documents have now to be for value of rupees 1.5 crore. So in that case, what would happen? There would be renewal come enhancement, renewal plus increase, renewal come enhancement in the credit facilities. Yes, Jay, you are asking what is cash credit facility, Jay. You have read all these things about in your intermediate level. So if I start talking about these things, then we shall be stuck up here also. Even then, I'll try to explain to you in very shortly, very curtly. So students, Jay is asking about cash credit facility. Cash credit facility are in the nature of working capital loans. Say a company would be needing raw material to carry on its manufacturing process. It would need to pay wages. The labor is not going to wait. It would need to pay wages for every month. It would have to meet out office expenses. It would have to pay power bill. Okay. So all these expenses are for meeting day-to-day requirements of the company. Which we call as working capital requirements. So the limits, which are the credit facilities, which are used to meet, which are granted by a bank to meet the working capital requirements of a borrower, are known as cash credit facilities or overdraft facilities. So these two terms are changed interchangeably: cash credit facilities or overdraft facilities. Okay, so clear to you, Jay? And you have also to understand, students, that cash credit facility is a running account. It is a running account. It is not that when bank grants cash credit facilities, it has given a loan. Say if there is a company XYZ Limited and the bank has granted a cash credit facility of 1 crore, it is not that bank would immediately disburse the amount in the account of the bank. Say this is the ledger of XYZ Limited appearing in the books of, say, ABS Bank. So how would the account be operated? Yes, Namrata, these are both the same terms. Cash credit and overdraft, these are being used interchangeably. There is no difference. So how would the account operate? Say on 1st April 23, the company has drawn a check. Say we assume that it is a first time sanction and the sanction was made on 31st March, assume, and now the company has got sanctioned a limit of rupees 1 crore in its favor. So the company now wants to purchase raw material, and it wants to pay raw material by paying to its creditors. Say assume that no credit is available to the company. So the company wants to issue a check to the supplier of raw material. So what it would do, it would issue a check and the bank would honor check of, say, 25 lakhs. So the amount would be debited in the account of the company for rupees 25 lakh. So this is the cash credit account, loan account. So in the books of bank, amount would be 25 lakhs. Say, and now again another supplier has to be paid, say on 6th April, say 5 lakhs. So the amount would be now, advances in books of banks would be now 30 lakhs. Okay, say on 30th April, electricity bill of rupees 1 lakh has to be paid. So now the amount would be 31 lakh. Say on 5th of June, some payment has come in the account of the company. Some debtor has paid, say 5 lakh payment has come. So now the amount would be 26 lakhs. So what is the advantage of having working capital credit facility or cash credit account is that the borrower can use the money according to its own requirements. He gets to pay the interest only on the utilized amount and not on the amount which has been sanctioned. Okay. Say if more payments come, then he would be utilizing his credit facility to a lesser extent, and the company would be paying lesser interest. Or when say he needs to stock more, the company needs to stock more and wants to purchase more raw material or to make more payments to its creditors, then it would be fully utilizing its credit facility. So this is how a cash credit facility account, or which we call in the banking language as a CC account, cash credit account, it runs. Okay. So is that clear? So guys, we were at the internal control over advances. So we had discussed about credit appraisal. Now after credit appraisal, what comes? What we had learned, after a credit appraisal comes sanction. Now what the auditor would see? He would see that proper sanction letter is there. And the loan is sanctioned according to, the loan is released, it is dispersed according to the terms of sanction. Because sanction letter is the basic document. Once the loan has been sanctioned, it is the basic document. Now, disbursement, release of that loan, these have to follow all the terms of sanctions, all the conditions which are stipulated in the sanction. Like say in cash credit facility, there might be condition that the company, the borrower shall submit stock statement monthly. Okay, or the borrower shall get its stocks insured. So once a sanction letter is there, then the concerned branch, it follows that sanction letter. It becomes a sacred text for them. They release the credit facilities on the basis of the terms and conditions contained in the sanction letter, and the borrower has to comply with the terms and conditions of those sanction letters. Okay. And another important point relating to documentation. Now the auditor would see that documentation is have been executed. Okay. Because unless documentation is made, the no loans can be disbursed. Documentation precedes disbursement. First, documents have to be executed. The properties which were required to be mortgaged, these are mortgaged by depositing their title deeds. Proper agreements are signed between bank and the borrower. It is only then the facilities are released. Okay. Clear to you guys? And then comes review of the accounts. Now, when the account is in operation, the staff of the bank, the concerned officers, they keep a tab. They check whether the account is operating satisfactorily or not, whether the borrower is complying with the terms and conditions or not, whether there are instances of payments which are being received. Many of those checks are getting dishonored from other banks. Okay, whether the borrower is requesting for a temporary credit facilities from time to time. So say if some borrower is requesting to grant some temporary facilities for few days, then it means, what does it reflect? It reflects that either credit appraisal was not done properly, that what was the requirement of the borrower, it was not assessed properly at that time, or borrower is not maintaining financial discipline. He is not able to run his business in accordance with his requirements. Okay, so all these things need to be evaluated. So these are some of the points which relate to evaluation of internal control over advances. And what about substantive procedures relating to advances? What you would check? What are the substantive procedures? So substantive procedures like say you would go to the master data of that customer, and you would see that that say interest rate which was stipulated in sanction letter, it is correctly fed in the master data. It is very important to see, because say if there is some difference, what was there, what was stipulated in the sanction letter, and say 0.50 paisa is fed less than what was stipulated in sanction letter, it would make a huge difference. It would cause revenue loss to the bank. Okay, so test checking these areas. And another example could be seeing that all the facilities sanctioned to a borrower are tagged under one customer ID, so that when you open the customer ID of that borrower, all the credit facilities granted to the that borrower are displayed. Okay. Examine all large advances on a sample basis. The material accounts which are there in the branch. Okay. So and follow that well, and to see whether accounts have been valued, have been classified according to RBI guidelines relating to asset classification, income recognition, and provisioning norms related to these. So you can yourself dwell upon these points if you get to understand these concepts. Okay. So now we come to non-performing assets. NPAs and special points to be taken care of by auditor in this regard. So guys, I assume that you understand about NPAs. You have read this at your intermediate level. You already know the meaning of NPAs. You know about their classification, or you need me to repeat it in short? Yes, guys, tell me. Yes, guys, tell me. You are clear about NPAs, asset classification, income recognition, and provisioning norms, or you want me to repeat? Yes, waiting for your mails. Namrata, Jay, Janvi, Viraj. Yes, Namrata is saying to repeat in short. So I'll repeat in short. So before that, let's take a break of 5 minutes. So guys, so let's take a break of 5 minutes. So we'll see you after a break of 5 minutes, guys. So NPAs, students, you already know that these are the assets which cease to generate income for bank. Which cease to generate income for bank. Because the borrowers are not paying, so these cease to generate income for bank. So as per RBI guidelines, there are asset classification norms. So you have to make distinction between these three terms: income recognition norms and provisioning norms. Okay, so what are asset classification norms? So asset classification norms are the norms relating to classifying assets in the books of banks. So what do these norms state? These norms state that assets have to be classified in the books of norms, in the books of banks, according to based on their record of recovery. Okay, say and these are classified into, you already know, into standard assets, which are regular accounts, and non-performing assets. And non-performing assets, you know, are of three types: substandard asset, doubtful assets, and loss assets. You have already read about these at your intermediate level. Okay, so quickly I'll explain to you. And the doubtful is further categorized into D1, D2, and D3. So what is a substandard asset? Yes, what is a substandard asset? Substandard asset is an asset which is showing some signs of credit weakness, and there is a possibility that if these weaknesses are not corrected, the bank will suffer some loss. Okay, and doubtful asset, now the condition of asset has deteriorated, the condition of advance lent has deteriorated, and there is definite possibility that bank is going to suffer loss. And loss asset is one where say the security value has gone down drastically, or security is missing, party is fled away. Okay, so these kind of things. So these are the things related to asset classification. And what we call about provisioning norms. Provisioning means the assets which are classified as NPA, the banks have to make certain provision in their books. So all the provisioning norms you have already read at your intermediate level. For a quick recap, in respect of substandard asset, 15% of outstanding balance, the provision has to be made. And in case of doubtful assets, different provision has to be made for D1, D2, and D3. D1 is asset which remains doubtful for a period up to 1 year. So provision amount is 25% of secured amount, secured balance, plus 100% of unsecured balance. And in D2, it is 40% of secured balance plus 100% of unsecured balance. And in D3, it is 100% of secured amount plus 100% of unsecured amount. It means complete provision has to be made. And in loss assets, again 100% of provision is required to be made. Okay. So why this provisioning becomes important? Yes, students. Why this provisioning becomes important for an auditor? What is the duty of auditor to see? And why do the auditors insist on proper asset classification? Why is there so much emphasis on asset classification and proper provisioning? Because when an asset is classified as non-performing asset as an NPA, bank has to make a provision and it hits profits of the banks. The banks would have to show their profits in accordance with the RBI potential norms on asset classification and provisioning. So you understand that why so much emphasis is laid on provisioning and on proper asset classification, and why does a question pop up every time in your paper on NPAs and on advances on asset classification? Okay. And what was the third thing? Third thing was income recognition norms. So when an asset is classified as an NPA, you have to remember, students, that banks stop applying interest in that borrower account. The banks do not recognize interest income as their income in respect of NPA accounts. Okay, they would post this interest in a sort of memorandum account, but they would not be taking it to their income head. In their profit and loss account, they would not be recognizing it as an income. Why? Because RBI guidelines state so. Okay, that in case of non-performing assets, interest income is recognized not on accrual basis. It is recognized only when it is received. Okay, so clear? Yes, students, broad overview of asset classification, income recognition, and provisioning norm is clear to you. Now we'll also quickly go through the NPA norms, which you have already read at your intermediate level for the asset classification. Now in this, an important word is overdue. So guys, can anybody tell you what do we mean by when a facility becomes overdue in case of banks? Just plain common sense. Tell me, when does a loan become overdue in case of a bank? What is the meaning of term overdue? What is the meaning of term overdue in case of a bank? Yes. Yes, Namarka, you are right. So a facility becomes overdue when it is not paid on due date. Say an installment was was required to be paid on say 30th April 2023. If it is not paid on 30th April 2023, then by the time the day end is done by the branch, this facility, this amount would be tagged as overdue. This amount would be tagged as overdue. So, no, after due date, this is the subtle difference. Namrata is saying right. A facility becomes overdue if it is not paid on due date. By the end of their day, if it is not paid, the system of the bank would recognize it as overdue. Okay. So what are the NPA norms relating to that? Say in case of term loans, a facility becomes overdue if its principal or interest is overdue for more than 90 days. So 90-day norms, you know. And similarly, in case of bill purchased and discounted, if the bill purchased remains overdue for more than 90 days, it becomes NPA. Okay. And in case of cash credit facility, in case of cash credit overdraft facility, it becomes NPA if it remains out of order. If it remains out of order. Now, what is this out of order? I shall quickly explain to you. Now, in the context of cash credit or overdraft facility, what does out of order mean? Yes. What does out of order mean? Out of order in context of cash credit overdraft facility means three conditions. One condition is that the account continuously remains over for over beyond sanction limit or drawing power for 90 days. Okay, here it is for 90 days. Okay, or if any of these three conditions are satisfied, then the account becomes out of order. Or if the cash credit account remains within the sanction limit or drawing power, but there are no credits in the account. For a continuous period of 90 days, ending on reporting date. Then it also becomes NPA. Or if there are credits in the account, but these are not sufficient to take care of interest. Credits not sufficient to take care of interest. वो इंटरेस्ट भी पार्टी अपना सर्विस नहीं कर पा रही है, then it also becomes out of order, and it is classified as NPA. So all these things you have read at your intermediate level. You can read it from there. So you have got a little refreshed up. Okay. So how does the system operate? So these days when banks are working on CBS platform, students, you have to understand that the system is identifying NPAs on a regular basis. You have also to remember that NPA classification is not done. It is not done as at end of 31st March. It is done on a real-time basis. Every day accounts are being marked overdue, are being tagged as overdue, and if they fulfill the NPA norms, which are there in the system, so the system automatically tags them as NPAs. Okay. Yes, Namrata, you are asking no credit in account means that say if a company was granted cash credit facility of 1 crore, okay, and say as on 31st December, the balance in cash credit account is say in the books of banks, debit rupees 95 lakhs. Okay, but between 1st January and 31st March, no credit has come in account, no check has been deposited, no payment on behalf of party has been deposited in the bank account. Okay, then if the account is, you can say, is not, there are no credit operations in the account for a continuously for a period of 90 days ending on reporting date, then also account becomes out of order. Okay. So clear, guys? So now we go to your module relating to audit procedures pertaining to classification norms. So you can open up your module at page 9.27. At page 9.27. Yes. So what are the audit procedures in this regard? Verify whether the bank has a system of ongoing identification and classification of advances through CBS without manual intervention, and its accuracy in crystallizing date of NPA. Okay, that you have to see that when the bank is classifying an account as NPA, that date is correct or not, that date is proper or not. You can test check, and you can test verify and see. Say this has got greater implications. Say if the date of classification of an account as NPA is not proper, it is wrong, then ultimately what would happen? It is going to affect provisioning. So like an asset may be classified doubtful asset at late, whereas it was required to be classified so early. So you know that there is a difference in provisioning between substandard assets and doubtful assets. Okay. Examine whether the classification made by branch is proper. So obviously there are RBI guidelines to it. So you have to see that classification made by branch is proper. and whether secured and unsecured portion of the advances has been segregated correctly in the system. Because you know that in case of doubtful assets, provision depends upon the how much amount is secured and how much is unsecured. We know that in D1 category, 25% provision is made in respect of secured portion, and 100% of provision is made of unsecured portion. Okay. Say if a company had availed a facility of rupees 1 crore and the account earned NPA. The account was first classified into substandard asset and then classified as doubtful asset. Okay. And say also the security of say 40 lakhs of residential house of director of company is also mortgaged with the bank. So what is the secured amount? Secured amount in this case would be 40 lakhs. And what is the unsecured amount? Unsecured amount would be 60 lakhs. 100 lakhs minus 40 lakhs. So as a D1, as a doubtful asset, what would be the provision required to be made in the books of the bank? Yes, simple question. What would be the provision required to be made in the books of banks? It would be 25% of the secured amount. What is the 25% of secured amount? 25% of 40 lakhs. That is 10 lakhs plus 60 plus 100% of the unsecured amount. Okay, and what is the unsecured amount? Unsecured amount is 60 lakhs. So the total provision would be 60 plus 10, 70 lakhs. Okay, clear? So review and compare the date of NP of loan accounts mentioned in current year statements with that of the previous year. Okay, if there is some change, then obviously you are going to ask question why it is so. Normally there should not be any change in the date of NPA. Okay, because it affects not only asset classification but provisioning also. And accounts regularized near the balance sheet date. Now this is very, very important, students. Say if an account has been classified, say if an account was not working properly, it was under stress. Okay, so the payments were not forthcoming, but say near the reporting date, near 31st March, near say on 28th March, account there are credits in the account, and the account is, as a result of it, the account is not classified as NPA by the system. Okay. So now what should be the duty of auditor in this regard? His duty is to see that these credits are in fact genuine. Say these credits, say the branch manager might have connived with the borrower, and these credits are not out of some another credit facility granted to the borrower. So what the auditor would do, he would check the vouchers of those credits from where the payment has come. Say if the borrower has brought his own funds, he is making the payment himself through his own sources, then there is no issue. Okay, that there could be something. Yes, students, you already know drawing power term is used in the context of stock statements submitted by borrowers, stock statements and book debt statements submitted by borrowers as part of availing their working capital credit facility, as part of their cash credit facilities. Yes, Janvi, Jay, Namrata, Kaushiki. You know about drawing power? You have already read about the same. Yes, CC account, it is true, Janvi. Namrata, sorry. But you know how to calculate drawing power. Yes, you know how to calculate the drawing power, how it is calculated. Yes, yes. Yes, Namrata, she is saying yes, you know. So I assume you know. So the auditors, they would have to check that drawing power is calculated properly in accordance with sanction letters. Okay. So whatever margin has been stipulated in sanction letters, say sanction letters stipulates a margin of 25%. Okay, while calculating drawing power. So the borrower has to deduct 25% margin from the value of stocks and book debts, as the case may be. Or if the sanction letter is stipulating say 10% margin, then the borrower would have to deduct that margin. And what another point has to be verified while verifying drawing power calculation? That point is that creditors are excluded. That is the main point. Say if the value of stocks of a company is say 5 crores as on a day, and creditors outstanding are rupees 1 crore. So what is the value of paid stock? Paid stock is 4 crore. And say margin is 25%. Okay, so margin is 1 crore. So drawing power would be 3 crores. So drawing power is always calculated on the basis of paid stock after reducing that value of stock which has been purchased on credits or which is covered under a letter of credit. Okay. Clear? Similarly, say if the cash credit facility has also been granted against the primary security of book debts, then value of book debts is also included while calculating drawing power. Okay, and sanction letters of banks normally have condition that book debts say over a period of 90 days are to be excluded while arriving at drawing power. So in such case, whatever book debts are appearing in the books of company, book debts which are for more than 90 days, these would be excluded. And what other points as an auditor you would take care to see? Sometimes say the auditor has given loan to its related parties or to sister concerns. Okay, and these are outstanding in the books of the bank, and the borrower to enhance its drawing power includes it under the figure of book debts, so that my book debts are increased and simultaneously my drawing power is also increased. So these points would have to be verified, that book debts consist only of figures which genuinely represent debts of the company, debts of the borrower. Okay. So clear, guys? Now accounts with temporary deficiencies. Now these special points have to be taken care of by an auditor. Say say a CC account, a cash credit account is running satisfactorily. You see the account, the operation in the account from 1st April to February, from 1st April 22 to February 23, say the account is running satisfactorily. The account is within its limit. Say the account, it is within limit of sanction limit of 1 crore. The borrower is paying its interest charge on service account in its time, and it has rarely gone over during the year. At very few times the company had asked some temporary or accommodation facilities. So assume that in month of March, there appear to be some problem in the account, or say there is inadequate drawing power for the month of February stock statement, which is submitted to bank in the month of March, or say renewal of the account was due on 28th February, but as on the balance sheet date, renewal has still not been done. So these are just in the nature of temporary deficiencies. These are just in the nature of temporary deficiencies. So if there are temporary deficiencies, the auditor should not insist for classifying the account as an NPA. So if the bank management say is relying upon a stock statement which is not older than 3 months, then it is okay. So if you are seeing if you are in the month of March, and if you are in the month of March and say the borrower has failed to submit stock statement for last 2 months, then it is quite possible that branch management is calculating its drawing power on the basis of stock statement submitted in the month of January. Okay. So there could be genuine possibility that borrower has not been able to submit stock statements, but these should not be older than more than 3 months. So this point the auditor has to see. Okay. And limits not renewed. Say if the limits have not been renewed, say renewal of a cash credit account was due. As I've told you, the renewal of an account was due, say, on 28th February. But it has not been done as on the date of, as on balance sheet date, as on reporting date. So should the auditor proceed to classify that account as NPA merely because renewal has not been done? No, he won't be doing so. He would be doing so only in those cases where renewal has not been done for more than 180 days, for more than 6 months. Okay. Is that clear? And another point, asset classification to be borrower wise and not facility wise. This is very important, students. Now you have to remember that NPA norms are applicable to borrower as a whole, not as a facility. Say if a company is there and it is availing a cash credit facility and it is also availing a term loan for purchase of machinery. Okay, so cash credit facility is say 1 crore and term loan is also of say 50 lakhs. Assume that cash credit account is operating satisfactorily. It doesn't fall under the NPA asset classification norms as prescribed by RBI, but But say term loan, in term loan, the borrower is not able to pay the installments, and the installments or the interest has become overdue for more than 90 days. Although CC account is operating satisfactorily within the limit, it has not become out of order. So it has to be seen that although CC account is operating satisfactorily, but since term loan account has become overdue, it has become NPA. So CC account would also be classified as NPA. Okay, this is again as per RBI norms. Okay. So the asset, the facility has to be, the asset classification has to be borrower wise and not facility wise. So normally, Namrata, there would be a customer ID attached to a bank, and in CBS system, all facilities would be granted to that customer in one customer ID. Okay. So in case of government guaranteed advances, now what happens in case of government guaranteed advances? In case of government guaranteed advances, there are two kind of possibilities. One is government guaranteed advances pertaining to which are guaranteed by state government, and one are advances guaranteed by central government. Okay, so as far as state government guaranteed advances are concerned, there is no effect either on asset classification or on income recognition. Say if an account has become overdue and amount is guaranteed by state government, then it would be classified as NPA according to the norms, and the income would also be recognized only on basis of recovery. Income in respect of same would also not be recognized in accordance with RBI guidelines. But the position is somewhat different in case of central government accounts, in case of central government guaranteed accounts. Now, what happens in case of central government guaranteed accounts? In borrower accounts where guarantee of central government is there, so the asset is not recognized as NPA, even though account has become overdue. Okay, but the income would be recognized only on realization basis. Okay, so for the purpose of classification, credit facility backed by central government guarantee, though overdue, can be treated as NPA only when the government repudiates its guarantee. So when the government cancels its guarantee, central government cancels its guarantee, only then it becomes NPA. Okay, otherwise it doesn't become NPA. But interest is, so here the guidelines make an exception, but the interest on such advance should be realized only when it is, should be accounted for only when it is recovered, only when it is realized. Okay, clear? And agricultural advances. What are the NPA norms relating to agriculture advances? Yes, any one of you guys, this you have already done at your intermediate level. What are the NPA norms relating to agricultural advances? Yes. NPA norms relating to agriculture advances. Yes. Yes, guys. Any one of you remembering? No, no mails. So agriculture, you have to remember, guys, that in case of agriculture advances, the norm of 90 days does not apply. The agricultural advances are classified as NPA based upon crop season. Based upon crop season. So there are two type of crop seasons: long-term crops and there are short-term crops. Okay, so short-term crops. What are short-term crops? So short-term crops are those crops in which period between sowing and harvesting is less than a year. Okay, and the long-term crops are the crops in which it is more than a year. So like sugarcane is a long-term crop, whereas paddy and wheat, these are short-term crops. Like you sow wheat, you sow paddy in the month of July, and you harvest the crop in month of October. So it is a short-term crop. So in case of such type of agricultural loans, uh, there are NPA norms stating that in case of short-term crops, the account would be classified as NPA if it remains overdue for 2 crop seasons, and in case of long-term crop for 1 crop season. Okay. So auditor has to see this. He has to verify this. And provisioning towards standard assets. Now you would be amazed to learn that there is also a provision is required to be made in respect of standard assets. Why it is so? You would say that these are all the standard assets accounts running regular. Then why provision is necessary? So a very small amount of provision, say in respect of some assets 0.25%, in respect of some assets depending upon the type of loan it is 0.40%. For say housing loans and for cash credit accounts, these might be different. So what is the reason behind making provision? This is out of, again, arising out of concept of prudence, again out of abundant caution, that so that actual profits of the bank are reflected. So as to account for the possibility of some unforeseen events. Okay, due to which there could be losses in respect of standard assets also. Okay, so this has also to be seen. This has also to be verified by the auditor in accordance whether the provision has been on standard assets has also been made in accordance with the RBI circulars at variable rates in respect of different sectors of the advances outstanding as in accordance with the RBI norms. Okay. So clear. So another distinctive points in the balance sheet of the bank, provision is also made in respect of standard amounts, although it is a very minuscule percentage, but provision is also made. So this point you have also to remember. Okay. Now restructured advances. Now what are restructured advance? Say the borrower is not able to pay the loan, but otherwise the business is functioning well, but due to say some issues in the business, some temporary issues in the business, the borrower is not able to service its commitment to the bank. Okay, it is in financial difficulty, or some payments from the customers which were required to come, these are not happening. Okay, and this position is continuing for a considerable period of time. So the bank management, the competent authority in banks, they may grant concession to banks depending upon case to case basis. Okay, like they may enhance the terms of payment. Okay, say earlier the loan was required to be paid in 5 years. Now they may reduce the EMIs and say, okay, we revise the sanction and we restructure the account, and the loan would now be repaid, say, in 6.5 years, not in 5 years, so as to ease the burden. Okay, or it may include reducing rate of interest, granting some concession in rate of interest, so that borrower is able to service its obligation to the bank. Okay. So when restructuring may be in respect of standard or NPA accounts, it is not necessary that when an account becomes NPA, it cannot be restructured. It can be restructured. So even the accounts which are standard assets but which are showing signs of stress, which are facing financial difficulties, these can also be restructured. And the restructuring is always from prospective effect after the date of sanction. Okay, these cannot be from the back date. These cannot be from the retrospective effect. Okay. And one more important point for the auditors to see is, say, during the time lag, the restructuring application is in process. So it means, what does this mean? It means that borrower is facing difficulties. Borrower is facing difficulties, and he's or the company is in financial stress. So auditor has to take a view whether some provision is needed. Okay. And another important point in case of restructured accounts, when a standard account is restructured, then it is degraded. It is downgraded from standard to substandard. And say if an NPA account is restructured, then it would remain in the same category in which it was there before restructuring. Like a substandard would remain in substandard, D1 would remain in D1. Okay. Upgradation of account. Now that is one of the important area for the auditor to check. Say it might so happen, students, in case of an NPA account, there were certain, say, overdues on the basis of which the account was classified into substandard asset, assume. And now suddenly the party has got some funds, and the borrower, he somehow manages to clear his overdues. The amount of overdues is cleared. Then account can be upgraded. Earlier it was classified as substandard, but now it can be upgraded to standard asset. Why? Because overdues have been cleared. The condition under which the account was classified as non-performing asset, that condition doesn't remain now. So when overdues have been cleared, account would definitely be upgraded to a standard asset. Now, what is the role of auditor in it? What care he has to take while verifying upgradations in accounts which were classified as non-performing asset. Now, first thing you would see that all the overdue amount has been recovered. Say if overdue amount was, say if outstanding balance was rupees 1 crore and overdue amount was say 20 lakhs, then he would see that all the overdue amount has been recovered. It is not that the borrower says some partial amount of 10 lakhs out of this overdue amount of rupees 20 lakhs and account is upgraded. Whatever was overdue, whatever irregularity was there, that has been now been completely rectified, that has been completely wiped off. Okay. And another thing the auditor has to take care of is cutoff. Say an account is was classified as NPA as substandard as on 31st March. Okay, and recovery has come on 5th April. You are auditing the books on 10th April. Okay, now what you have to see, what is the position of account as on 31st March. Recovery has come on 5th April. The irregularity has been removed as on 5th April, but the account remains as non-performing asset, as a substandard asset, as a non-performing asset as on 31st March. Clear? So this is also one of the important area for the auditor to see when the account is upgraded from a non-performing asset to a standard asset to a performing asset. Clear, guys? Yes. And what is the duty of auditor in case of sale purchase of NPAs? Say there is a system in these days. There are asset reconstruction companies. There are special vehicles which by which a bank can sell its NPAs. Say there are NPAs in banks, and the bank wants to sell its non-performing assets. So it can sell those NPAs to another company specializing in it, or to some another bank. Okay. So what the auditor has to see in this regard, he has to see that when sale is done, it is in accordance with the board policy in this regard. Okay. That the account has remained NPA for at least 2 years in the books of the bank. Only then it can be sold. So this is also one of the important point, that only such NPA can be sold which has remained NPA in books of bank for at least 2 years. Okay. And when a bank sells NPA, all the risks related to have been removed. It should not be conditional. Okay, all the credit risk related to NPA has been transferred to the purchasing entity. Okay, and the bank does not assume any risk pursuant to the sale of NPAs. And another point, the auditor has to see that the seller bank actually gets the money. The bank gets the money in exchange of sale of that NPA. Okay. So the actual money, the entire sale consideration has to be received upfront in one go. It has to be received upfront basis. Okay. And the bank has not purchased an NPA which it had originally sold. Say it might so happen that bank had sold some NPA account and it might again repurchase it. So it can't happen. It is against the norms. So clear, guys? And on the sale of NPA, the same has been removed from the books of the selling bank, from the books of the transferor bank, and say in respect of an NPA account, rupees 5 crore was outstanding. And if the asset is transferred to another person, say to another entity for 4.5 crores, then the difference between the book value and the amount at which it has been sold, it is loss for the bank. It should be debited in the profit and loss account of the bank. Okay. And if the sale is for contrapoint, and if the sale is for a higher value than the net book value, then what should happen? Then this excess can be utilized to meet the loss from sale of other NPAs. So provision should not be reversed, but excess amount can be used to meet the loss arising from sale of other NPA accounts of the bank. And what happens? And what happens in case of purchase of NPAs? Say if you are on the other side, if some bank is purchasing NPAs, it is not selling, it is purchasing. So when one purchases NPA, the purchasing entity, it has to ensure that it is subject to the provisioning requirements. Say if it has purchased some substandard asset, then it would be classified as such in the books of the bank, in the books of purchasing banks. Okay. And subsequent to purchase, some recovery comes. Okay. Then it should be first adjusted against its purchase price, against its acquisition cost, and only when acquisition cost has been met, only then the balance amount shall be recognized as profit. Okay, so such point of things. So these are the some of the special points, guys, which an auditor has to take care in case of NPAs. So some few more points which I would like to tell you, guys. Have you heard the term? These are all about advances. Have you heard the term SMA, special mention accounts? Now, what are these accounts? Yes. Can anybody tell? Yes, SMA accounts. Yes, Namrata, Viraj, Janvi. Do you have any idea of special mention accounts? What kind of accounts are they? Yes, any idea, guys? Yes, tell me quickly. Viraj, Namrata, Janvi, Koshika. What are special mention accounts? No idea. No mails. So students, you have to remember that special mention accounts are those accounts, yes, Janvi is writing correctly, which are all those standard assets, but these are the accounts which are showing some signals of stress. Say in case of a term loan, the account would become NPA after becoming overdue for more than 90 days. What about between period of 0 to 90 days? So first, the borrower would not make payment of first installment, then he will not make payment of second installment, and then we will come to 90 days norm. So such accounts which are standard accounts but which are showing some signs of stress, some signs of financial stress, these are known as special mention accounts. So this classification, what is the purpose? What is the significance of this classification? What is the importance? So it is also a sort of type of internal control over advances, over the operation of advances, which are devised by the banks, which are devised by the bank managements, so as to alert the bank management, look, take some corrective action, follow up with the borrower, see why the party is not, why the borrower is not able to pay up, follow up with him, avoid the slippage. So these are kinds of significances, these are kind of benefits which accrue when we classify an account as an NPA. So banks are required to classify an account as NPA before these actually become NPA. So it is a sort of pre-NPA stage. Okay. So by doing so, the higher authorities, the controlling authorities come to know that there is a possibility that after 3 months, some accounts are going to become NPA. These are showing signs of stress. There may be slippages, so that corrective actions are initiated. Okay. So clear to you guys? So SMA accounts are again classified in SMA 0, SMA 1, and SMA 2. Okay. SMA 0 means overdue between 0 to 30 days. SMA 1 means 31 to 60 days. And SMA 2 means 61 to 90 days. And after SMA 2, anyway, the account is going to be classified as non-performing asset, as NPA. So clear, guys? So students, this was all about duties of the statutory auditor regarding advances. Now, after you have understood all this, you can easily work out what are the duties of concurrent auditor regarding advances. Now, when he is there in the branch on a daily basis, or during substantial period of a month, then what are his duties? What areas he has to check? Now, simultaneously, I am also taking up concurrent audit. Okay, what are the areas he has to check? Now, just throw some intelligent guesses, guys. Yes, come on. Write some viewpoints. Now, as far as advances are concerned, which areas what are the areas of focus for a concurrent auditor? Yes. Yes. Yes, students, write down. Send me your mails. Yes, guys. Anybody? Duties of concurrent auditor in relation to advances. Yes, which areas? Which areas he should check? Yes. Anybody? No. So again, those simple basic things. Say for a month, he would be checking all the sanction letters of advances sanctioned during a month. Okay, he would be checking, he would be verifying that all the documentation is complete. Facilities have been released and disbursed only after documentation is complete. Okay, he would also see that correct interest rate is fed in the system, because otherwise it can lead to revenue loss. He would see that, say, processing fees which is there to be charged from the borrower in terms of sanction letter, this has been collected. This is one of the important revenue leakage areas. So students, you have also to remember that revenue leakage is also that verifying and ensuring that there is no revenue leakage in the branch, and verifying the areas of revenue leakage is also one of the important duties of concurrent auditor, not only in respect of advances, but also in respect of other areas of the functioning of branch also. Okay. Is it clear to you guys? Yes. So you can yourself make it such sort of points. He would also review the operation of the account. He would also review the operation of account, that account remains within the sanction limit, within the drawing power. So clear, guys? Yes. Students, and one more point. As far as statutory audit is concerned, in addition to giving a main audit report, the auditors also give a report which is known as LFAR, long form audit report. Statutory auditor, besides giving his main report, he is also supposed to give a report on specified matters in long form audit report. So this report, what is long form audit report? This report contains auditors' comments on various areas of functioning of bank, like cash, like deposits, like advances. So there is a structured format. There is a structured format for long form audit report. There are various points. So when you go to conduct statutory audit of bank, you would also be giving your report on the specified matters in a report known as long form audit report, which we call it in banking language as LFAR, which we call as long form audit report. So this report, long form audit report, this is given by branch auditors, and consolidation takes place at the actual level. Okay, and statutory central auditors give their, after considering the comments of the branch auditors, they give their report. They also summarize their comments in long form audit report. Okay. So guys, is the point clear to you? LFAR, the detailed format, what is included in long form audit report, it is not in your syllabus. In any case, guys, would you like to see how does a long form audit report look like? Would you like to see how does a long form audit report look like? And I would request you to also to go through it. To once go through it, it would increase your level of understanding. It would increase your level of understanding. Okay. So I am sharing with you the format of long form audit report. Guys, you are able to see the screen? So this is how a long form audit report looks like, which is to be given by statutory branch auditor. Okay. So there are comments to be given in respect of all the assets and liabilities. There are questions, it is in questionnaire form. There are questions and answers are to be given in respect of all the areas of functioning of a branch. Okay. So since we have first done advances, so I would take you to the advances part. Okay. I would take you to the advances part, which you have already done. So these are the advances. So what does the LFAR ask the auditor to comment upon, say, in respect of credit appraisal? So heading is credit appraisal. It wants the auditor to state, in your opinion, has the branch generally complied with the procedure instructions of controlling authorities regarding loan applications, preparation of proposals, enhancement of limits, including documentation? What is, in your opinion, major shortcomings in credit appraisal? So the auditor would have to give comments here. If what he has found, if he has not found any shortcomings, he would simply write, no major shortcomings have been noticed. If some shortcomings have been found, he would say that on my test check, these shortcomings have been found. Okay. So guys, when you read these kind of things, you get more familiar, and you also get a database of words, of lines, of terms, which you can use in your exams for writing your answers. Okay. It broadens your catchment area. It broadens your reach. Okay. So another question is like, have you come across cases of quick mortality in accounts where facility became non-performing within 12 months of date of first section? So what are quick mortality accounts, students? Say if an account is sanctioned on 1st April 2022, and it has become NPA, say on 31st December 22. Within 9 months, it has become NPA. So in banking language, we call it as quick mortality. Account बहुत जल्दी खराब हो गया. The party has defaulted in a very short span of time. So why it is required? Why it is so that this question is being asked in long form audit report? Point is, it shows that credit appraisal might not have been proper. So what did the bank official see? What did the branch manager see when he first sanctioned the loan to the party? That it has become uh, non-performing within such a short span of time. Within a year of sanctioning the facility, it has become NPA. So such kind of things. Now, whether in borrower accounts correct, applicable interest rate is correctly fed into the system. So, like in case of sanctioning, have you come across instances of credit facilities having been sanctioned beyond the delegated authority? So, wherever the loan has been sanctioned, whether it falls within the delegated powers of the manager, उसने लोन तो सैंक्शन कर दिया, whether he was authorized to do so, you would ask him to show me your manual, whether what is your authority to sanction loans. Okay. Similarly, such kind of questions. Similarly, on documentations, have you come across instances of credit facilities released by the branch without execution of necessary documents? What deficiencies in documentation you have observed? Like say in case of company, its charge might not have been registered with ROC. So you can verify the same online. Besides seeing in the borrower file where there would be a certificate of charge, you can also verify it online by going to the master data on the ROC website. So these kind of things. Yes, Namrata, I can share this format also. You can also download it from online. Just write, just go to Google and write LFAR for banks new format. LFAR for banks new format, because this format was revised about a year or two before. So these kind of things. So it has got, LFR has got questions not on advances, but on all aspects, on deposits, on liabilities, on asset classification norms, on provisioning. So it has got questions on virtually on every aspect of the banking. Okay. So yes, guys. So guys, yes, did you gain a basic understanding of the chapter? And I told you guys at the beginning that in case of bank audit, do not try or do not assume yourself to be an expert. Do not assume yourself to be an expert after attending 2-3 lectures. Okay, this is a very, the more you read, the more points you will gather from your module. So this chapter demands attention and devotion for at least unhindered devotion of at least 4 or 5 days from you. Okay. So this is over for today. We will be meeting tomorrow at the same time at 7 a.m. and do drop your mails, students. How did you find the lecture? Was it interesting? Were your doubts resolved? Okay. So do drop your mails. Do give your feedback on the feedback page, on the feedback forms. Okay. So it's over for today. So see you guys tomorrow. See you guys tomorrow morning. Okay. Thank you all of you for a patient listening. Thank you all of you guys. Yes. Yes.